The New York session opened with a neutral market sentiment, searching for the upside. Investors find relief in the ongoing recovery in the US bond market. Yields of the benchmark 10-year Treasuries again dropped below the key level of 4.40%. It means that the US dollar remains vulnerable against its rival currencies. Nevertheless, some Fed's policymakers could give fresh short-term impetus to the US dollar. On Tuesday, futures on the US stock indexes are trading roughly flat, making a minor downward correction. On the whole, US stocks retain their high values. The market is trading with a low volatility. Minor correctional dips of the major indexes come as a no surprise. The S&P 500 is likely to settle at its new one-year peaks after retracement, and this factor supports all global stock markets. The US dollar fell to the lowest level in a quarter. Yields of US Treasuries declined to their two-month lows. And these circumstances are benefiting European and Asian currencies and other risky assets. The Federal Reserve is to blame for the greenback's weakness. The S&P 500 is following the overall uptrend. Following a record 10% rally in November, the stock market is now overbought. Still, the major stock indexes are unwilling to decline, and the stock market is just a few percentage points away from the one-year high notched in the summer. Wall Street is on a track to new highs of 2023, and this could happen in December. In this case, the S&P 500 might close the year with a 20% increase. The index could print new highs above 4,700 in the short term. At the same time, the level of 4,560 serves as a resistance in the last few sessions. The US dollar index has been firmly trading in the red, and the downtrend is propped up by falling yields of the US Treasuries. Yields of 2- and 10-year Treasuries declined to 4.87% and 4.40% respectively. The US dollar is under selling pressure because traders are pricing in the Federal Reserve's rate cuts by the overall 85 basis points in 2024. Besides, the risk-on mood resurfaced in light of the last report by the US Consensus Bureau, which logged a significant decrease in the new home sales in October. The US dollar is very sensitive to the US economic data, and today investors are alert to the fresh US data such as the House Price Index and the CP Consumer Sentiment Index. Besides, remarks of Fed policymakers will provide clues to the central bank's vision of the current economic situation. Austin Colsby, Christopher Waller, Michelle Bowman, and Michael Barr are due to speak tonight. Meanwhile, market participants are decreasing their bets on the Fed's rate cuts. This might support a recovery in the US dollar. To sum up, it's too early to predict a full-fledged downtrend in the US dollar. Macroeconomic data reveals some resilience in the US economy, and this could benefit the high-yielding US dollar. In the early New York session, its index plunged to 103.07, the lowest level since late August. The greenback's weakness is especially clear against the Canadian dollar. The USD CAD pair has been trading lower for 3 sessions straight, and today it went below the landmark level of 1.3600. The loonie finds support from rising oil prices and a positive sentiment in the oil market. The USD CAD pair could jump to 1.3700 in the short term, though a breakout of last week's high at 1.3712 seems unrealistic. The Canadian dollar is expected to trade quietly today. The economic calendar reminds us about crucial reports at the end of the week. so the currency pair could gyrate up and down following the news. On Thursday, traders speculating on the Canadian dollar will get to know Canada's GDP. On a Friday, traders will take notice of Canada's employment data for November. The PC price index, the Fed's preferred gauge of inflation, is due on Thursday, and the week will finish with a speech by Jerome Powell. Today, Bitcoin is trading higher following a steady rally, and the price briefly spiked above 38,000 before the highly anticipated launch of Bitcoin spot ETFs in the United States. Institutional investors rushed to buy crypto assets, and they allocated $346 million to ETFs last week, the largest inflow of funds since late 2021. The overall investments for the year equal $1.7 billion. Bitcoin is taking the lead as the most invested token. The volume of buy positions is $1.6 billion. That accounts for 93% of the total investments. With such massive investments, the flagship crypto is expected to rally by 6.2% in the first months after the launch of ETFs, and the token could surge by 74% in the year ahead. Provided that the US regulator approves ETFs, Bitcoin could trade at $64,000 per token by December 2024. Our team hopes that you will make well-rounded trading decisions, benefiting from our market analysis. Your feedback is appreciated. Good luck in your trading, and see you online tomorrow.